yet I'm able to get market advantage, so on and so forth. The problem is that when we do get funds, we do get it in tranches. You see, this is an issue which I would love to crack, and if you have any insights on this, I'll be grateful. How do I, and my investors want me to basically overachieve on my targets, and basically they want me to ensure that I spend the money as of yesterday. I would love to be a Shylock and keep some funds to basically push market advantages, but I can't see a way of doing it. So although your statement is wonderful, is there a way we could actually do it?
So actually, we, as an industry, some of us have a different point of view. We don't really, once we have raised a fund, we don't make very much money on treasury. So it makes no difference for us to continue. If I allocate 50 crores to you and give you 10 crores a year as a tranche, I don't make much money on the other 40 crores. So I'm not really keeping it for interest income. So it's not really an aim for me, right? So I actually would be happy deploying it all, right? Except I'm not, in the cases I'm not going to deploy it all, or people like me may not deploy it all, when they are unsure about your business and the trajectory it's going, they're unsure of what you aim to do. Then it's a communication issue. If you can tell your investor, look, dude, I want to keep this amount for a rainy day. I want to keep that amount for acquisition. I want to keep that amount for buffer. If you're able to convince him, there's no reason you shouldn't get the money. As an industry, I don't think we have an interest in keeping the money with us once it's already allocated to you. Right? As long as it's already drawn down. Once it's drawn down, the clock is ticking, the IRR clock is ticking. So it makes no difference to keep it with us. Do you have a different point of view?
Often for us, the tranching is true that it's kind of a risk mitigation mechanism. But more often, the tranching that we have seen in our own deals happens because of valuation issues, or there's no agreement on valuations, and you tend to tranche in one or two to make sure that the second tranche gets higher valuation, so both entrepreneur and us can agree on some median valuation between the two tranches, right? So it's a factor of many, but like Mahesh said, if you really believe that the strategy for your company is to raise that amount and utilize that properly, there shouldn't be any issue, unless there is a valuation issue, or we don't see that you deserve to raise that kind of money in one shot because of some inherent risks in your model.
Good. We have time for 2 questions more, and after that there will be people, many of them will be available here during the break for questions. Please.
Yeah, my name is Arvind Mathur. I'm from IBCA. I have a question for Vish. Given Vish, you are based out of Palo Alto and Stanford, and you also commented upon the ecosystem and growing entrepreneurship in India. What more needs to be done in creating the ecosystem in India for more entrepreneurs?
So I think we are getting there in many ways. I think there has to be just the way in a marketplace like in eBay, you need to have enough supply of capital, which is coming to India. You also need enough support services. So you need venture debt funds. You need, I guess, other intermediaries in the ecosystem to come and support the entrepreneurs. So all of that is coming through well, and folks like Mahesh and Rajesh providing smaller amounts of capital. You can't have a TPG come in and build this marketplace, because we invest much larger pools of capital and essentially pick up companies which have reached a certain scale. So essentially it's the participants, both on the demand side and the supply side, have to come together in a thriving way. So there are pockets that are building up. Bangalore is certainly becoming one such area where there is that ecosystem of other entrepreneurs that you learn from. A lot of companies we look at, they say that they learn a lot from their other peers in the market, right? And so those are things that are coming about, and I think Rajesh will probably have a better view on this than I will.
So one last question, and then many more questions during the break.
Sorry, just to add one thing, one observation that we have found, there are so many second generation entrepreneurs of traditional entrepreneurs who have built businesses. I mean, for example, I come across so many auto component companies whose next generation is not interested in running that business. And yesterday I met somebody who's actually shutting down his business because he's got only daughters, and his sons-in-laws have other things that they do. Daughters don't want to do it. And I met another entrepreneur whose son is not interested in the business, but he wants to do something backed by VCMP. So you're going to see this ecosystem of entrepreneurship developing much faster now with this next generation getting educated outside, coming back, wanting to do something on their own. Many of them work with consulting firms for some years, come back and then want to do something on their own. So this ecosystem will develop much faster now than it has ever been in the past.
Hi, this is Ashish Bedagali. I'm from Pune. I represent entrepreneurial ecosystem called Pune Open Coffee Club. And so, as Vish mentioned that it's going to be, there is a lot of money, but there are no good promoters to back. Rakesh also said that, there is a lot of money, but, it's up to us that the money, bears fruits. So then the complete focus comes on to the entrepreneurial ecosystem. So my question is that, the natural organic improvement of the entrepreneurs or the ecosystem, is it good enough, or do we need to do something more with the ecosystem to accelerate it better? And what can an ecosystem provider like us do in that respect? Thank you.
It is a common saying that even if you put 9 men on the job, a baby will not come out in 1 month's time, right? I think there are things that will simply take their time. What these inorganic accelerations tend to do is actually help increase that rate of change. When I came back to India in 99 and I spoke at IIT for the first, at IIT Bombay, I remember talking to a class of 300 and saying, how many of you want to be entrepreneurs, and 4 put their hands up, right? Today on a class of 300, 250 put their hands up. So that change has happened over a period of 15 years, 16 years, right? You can put in hindsight a CAGR of 10% or 8% or whatever on it. I think that's fine, that's the way it is. It's hard to pump more money into the ecosystem. I'm doing some work with the Delhi government to figure out how to build entrepreneurship out there, given that there are no funds based in Delhi and so on and so forth.
Not only about money, it's about the efforts.
You've got to really figure out how to start at the smallest stage. See, also culturally, to add to what, we have always funded our children, and we've never funded somebody else's children. We don't have an angel investing, we never had for a long time. It's not in our culture to angel invest, right? So getting the idea into people's heads. So what Sridhar said about second generation entrepreneurs, we flip it and say, so what is his father doing if he's not funding the son or the daughter? He should be funding somebody else's son or daughter. So getting that, all of these things take time to happen. But they're happening. There's certainly, I've been here 16 years back in India. They're happening a lot more right now across the board, right? It's good, it's all good.
So thank you. It's been a great panel. Thank you very much. And I'd like the audience to show their appreciation of the panel.
Thank you very much, panelists, Raj, for coordinating the first Achhe Din panel. As somebody described this event as an Achhe Din event. So, delighted that, we could have a good picture, and, looking forward to the rest of the panels. I'm delighted that Mr. Rakesh Malhotra, our keynote speaker, is already here, and, we look forward to a quick coffee break of 15-20 minutes, and please do get back in because he has multiple dimensions on private equity to present. At 11:35 we will start the keynote. Thank you very much.